The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Welcome, folks. Tommy O'Brien with Tom O'Brien. We got a positive market to start things off on Wednesday trading. Dow Jones positive by 52 points, trading 25,059. S&P's positive by about 7 points, trading 2771. And NASDAQ positive by 24 points, leading the way as usual, trading at 75.35. Good morning, Tom.
Morning, Tom. How you doing?
I'm doing well. How are you?
Good, man. Good.
So we had quite a turnaround yesterday, negative markets, and today we're back in green territory. Nothing like it.
Back in green territory. Let's see what that market can do. You get good old King Dollar. That's up by 200 ticks, 89,410. That continues to struggle. So we'll see where that baby shakes out. Notes and bonds get interesting here. You know, the 10-year note up 1 tick, 120.12. 30-year bond up 12 ticks at 144.16. So that baby is coming into a swing point. We had some volume yesterday, so they're buying the bonds, man. So this is going to get intriguing.
Yeah.
Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade. And don't forget, folks, every trading day right here, 11 to 12 Eastern Standard Time. You want to understand defined risk, options, futures. Great program. Just go to TFNN, hit Tiger TV, or go to YouTube and pull up TFNN. Kevin Hinks, what's going on?
Good morning, O'Brien family. How we doing?
Good morning, Kevin. We're doing well. How are you?
I'm good. You know, more numbers today. PPI retail sales. Again, some very in-line, moderate, benign, whatever word you want to use, inflation numbers, and actually a little bit softer on the retail sales. Second month in a row. But, and my partner Victor Jones pointed this out. Within that retail sales number, there is some real strength in some of the retail sectors, right? Overall, it missed by a tick without food and energy and gas. But without that, there was actually some strength in this retail sector.
Yeah, you know, Kevin, yesterday, Tommy and I were looking at what ended up happening. I guess we were looking at Dick's, and then we went to Under Armour, and then we went to Nike. It's like Nike's at highs. So there's winners and losers out here, right?
Absolutely, and that's what we just talked about on the air, Tom, is within this retail sector, right, which is overall done fairly well. It's come off its lows and traded pretty well. But there's some big winners and big losers within this sector. Look at today, as we sit here, Toys R Us, right? Liquidation proceedings, it sounds like. So, I mean, within this sector, there's winners and losers, and it's all really the Amazon effect on these retailers.
I'm telling you, there's no doubt. I guess, you know, in one way, it's kind of exciting, meaning the last man standing in that business, because what does happen is that, you know, as these companies go out of business, well, there's less companies out there, and it's not like we're all going to be at home just on our mouse clicking. I mean, there's entertainment value going out to malls. I mean,
exactly right. And, you know, Tom, that is a really good point. But the question is, if you're an owner of one of these malls, right, if you own the real estate, how do you transform those? Because you are going to have a drop-off. You're going to have some free space. What are you going to do? Do you go via the way of the health club? Do you go via the way of more restaurants? You got to have something to bring out the people and get the butts in the seats. How do you do that? That's really the question that is fascinating going forward.
That's for sure, because you know, everything's going to change for sure, right, Kevin? It's not just going to be a million retail stores hoping that people walk by and walk in your store and happen to buy your brand. I mean, we see constantly brand awareness is also huge. You know, the Nike, what a brand Nike has, right? I mean, amazing. And that's part of probably why they're so successful in terms of they don't need people just to by chance cross pass, you know, a Foot Locker to buy their sneakers, their items. But yeah, I mean, you know, hopefully they get an Amazon store in there somewhere in the mix. I'm sure they'll try to.
And that's the question. Right, Tommy? What happens to Amazon and their need for space as well? Because make no mistake, they're going to need space even if it's just for distribution, they're going to need space.
Yeah. We're lucky in Tampa. We have a pretty big hub in Tampa already, and so we were one of the first markets that they had come on to with the same-day delivery and so forth. So it's a cool existence kind of, being in one of those hubs of many in the country. But you can see how when they pick up steam and you start seeing same-day delivery, et cetera, and it's only going to grow from there for sure.
Right. Do you start to cross the lines, though? Does a Whole Foods turn into a grocery store and a distribution hub? You know what I mean? Is it
totally
things in one?
We were both. Tom and I were both excited the day they launched that because we said same thing. We already know that they kind of roll out the early stages in one of the Tampa markets, one of many in the country, but they do. So guess what? When those steaks start getting delivered for, same day to your doorstep, we're excited, man, for sure. Let alone at the store and having all those deals, and you can walk in there and, you get your deal. If you're a Prime member, you get special deals at Whole Foods and all that, yeah.
Yeah, I mean, in 3 ways, how would you describe this economy? I would say it's an attack on margins, it's an attack on the middleman, and it's a delivery economy, right? Yeah. I mean, you can say what you want against Amazon. What it is most, it's a delivery mechanism.
Yes.
And you can look back. What's really intriguing is that Tom Monahan, when he started Domino's, right?
Yeah.
Bottom line, I know we've talked about this before. They asked him, I saw him in an interview, and they asked him about business. He says, I'm not in the pizza business. I'm in the delivery business.
There you go.
So it's that long ago, and we know how well Domino's did, and then Papa John's. I mean, the bottom line is that we want things right to our door. No. The intriguing thing about the malls, whoever figures that out is going to be a very successful person. And, listen, it might be dozens of restaurants, dozens of bars, and dozens of entertainment. They might just be big entertainment centers, because we know demographically most of them have a radius because of, how they structured them, of a pretty good, 360 radius.
Maybe they'll have like those golf places you can go with your, friends and your, an experience type of atmosphere, let alone the restaurants, for sure.
Yeah, like a Topgolf.
Topgolf. That was what I was looking for. Exactly.
The evolution of Topgolf could be into a mall area.
Oh, for sure. I see that as something that, just because it needs to become an experience, let alone it just can't be a movie theater and stores anymore and a couple restaurants.
I agree completely. And it will, though.
Yes.
These malls will adapt and get something to get people out there. But there's no, what percentage of this nation has a mall within a couple miles of their house? A large percentage, right?
Totally.
Malls are leaving our normal daily lives, but they're going to change for sure.
Yeah, and even, if you look at Simon Property, so Simon Property's largest owner of malls in the world, they're still trading 157. Bottom line is that, they were at 229, but it's not like the chart's destroyed.
No.
The company is still printing money. Do you know what I mean?
And especially if you just look at right from June of last year, it's right where it is. And retail's been changing a lot since June of last year to be malls holding steady since that time. Yeah.
Right. Yeah. And remember, who was the poster child for retail weakness, which was Macy's, right? Well, Macy's owns real estate. So they've got a real estate portfolio that's pretty substantial. So Macy's isn't going anywhere. They've got major assets.
It's a brave new world. It's all coming real quick.
Folks, right here, 45 minutes from now, you want to understand options upside down, futures, defined risk. Kevin and his team, great program. Kevin, thank you so much, man. Look forward to the program in 45 minutes.
Thanks for having me, guys.
Thanks, Kevin.
Thank you. Stay right there, folks.
Larry
Tommy and I come right back.
has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionics, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, everybody. Tommy O'Brien with Tom O'Brien. Markets have turned negative in the last 15 minutes. We got the Dow down 56 points, trading 24,950. S&P's negative by 2 points, trading 2763. And the Nasdaq negative by 2 points as well, trading at 7508. So, Tom, it's Wednesday. We got a little EIA action on Wednesdays, 10:30 a.m. Eastern Time. We get the EIA inventory report on crude oil. Let's jump over to the Nadex platform and take a look at this market. So currently, we have the April contract up, trading at $60.82. And let's just see what type of trade possibilities we have here. We have 11 minutes exactly until those numbers come out. And I'm going to jump in here first and take a look at maybe the 9 a.m. We're in commodity spreads, crude oil, 11 a.m. spreads.
9 to 11, yep. Okay.
So these expire at 11 o'clock. These would be the shorter time frame that you would be trading if you were looking maybe to trade a spread with the 10:30 oil report just coming out in about 10 minutes. So right now, again, oil trading $60.83. So we have price points here, and if we're looking for a volatility trade, as we do sometimes, maybe getting both sides of the market, as in buying a spread with bullish potential, selling a spread with bearish potential, we have price points that would line up either with $60.50, so about 30 cents from there, as oil is kind of dropping as we speak, just around $60.80, or would have one at $61.25. So on each side, you're going to have about 30 to 40 cents of intrinsic value, depending on which spread you're using, right? You know, you could use the $60.50 spread, and then in that case, just to pull it up, you would have bullish intrinsic value, as in if you'd be buying the spread with $60.50, you would have 40 cents of intrinsic value. I'm sorry, yeah, 32 cents. Right now it's trading $60.82. The floor of that's $60.50. You'd be buying it for 40 cents. And 32 of that would be intrinsic value. So that gets a little expensive when you're paying so much for intrinsic value if you're just looking for a pure volatility play in either direction. And of course, you could do the same thing where then you would be shorting the $60.50 spread at the same time. This one, of course, out of the money, just premium, and that would be the $8. So you'd be looking at about $48 with a lot of value to the bullish side here. Now, to flip that around, if you wanted a similar trade, with intrinsic value to the bearish side, you could set up the same trade using 61.25 as your point with $1.50 in each direction. So here's your 61.25 up to 62.75. This one being, Tom, the one that's just completely out of the money this time, right? Because you're at $60.80, call it. You got 45 cents to go up. So that would be the one that you'd have all just premium. And you can see, because it's so far out of the money, it's only $6 in premium. But then you would be selling the one that goes 61.25 down $1.50, and that is going to be the one that's going to have about 45 cents in intrinsic value now, and you can see that that lines up for about $49, and this would be one that is a volatility trade. You have both sides of the market. Anywhere away from 61.25 on both sides, you start to gain value, this one being all intrinsic value to the bearish side. So those are the 11 AMs. They get a little bit expensive, but if you have a bullish or a bearish bias, those might be a nice trade to set up. And again, you could just take one side of that trade, right? If you're bullish, if you're bearish, you could just take the one spread. We kind of like to set up the volatility trade, which is nice, looking for some action at the 10:30 oil report. So those
which we've had lately.
Oh, we have. The last 2 weeks at least, and my memory is short, but we've gotten spikes in one direction, maybe 50 cents a dollar, followed by a reversal of $1 to $2 in one case.
That was a monster 2 weeks ago. Yeah.
And oil in general has had some serious volatility, man. It has.
Right.
Okay, so those are the 11s. And let's just jump in and see how the 12 o'clocks line up. Now, these get set when they open. So, for instance, the 9 to 11s are getting set prior to 9 o'clock, depending on where oil is trading at 9. The 10 till noons are getting set just prior till 10. So they're going to have some different spreads occasionally. Now, the 10s till noons are a little bit different in that you could have $60, which wasn't an option.
Okay.
And so that is going to be 20 cents away from where we are. So if you had the bullish one going from $60 to $61.50, again, this one's going to be completely out of the money, no intrinsic value. And then your bearish spread going from $60 down to $58.50 would be the one that has am I seeing that? I'm sorry. No, we're at 61. Thank you. So these do line up, actually, $60.75. Okay.
Right.
So that's not bad. That would be 4 pennies away from where we're currently trading.
Sure, so again, which is pretty cool.
It is. General. So to start it over, here's $60.75, up $1.50 to $62.25.
Yeah.
We're within 5 pennies of where this contract begins. So the bullish spread is going to have 5 pennies of intrinsic value. You'd be buying that. $29, $5 of that is actual intrinsic value. And on the bearish side, you'd have no intrinsic value, just premium. And you can see the difference in the cost of the two is basically the intrinsic value, which is on the bullish side, because we're 5 to 7 pennies now above that floor. So this would be $60.75, and the total trade would cost you just more than $50, which would be about 50 cents of movement you would need away from $60.75 to get to your break even. And these are noons, so you would have until 12 o'clock, an hour and a half after the news breaks, right?
Yes.
And just to do a full comparison, then we jump to the 230s. And so these line up relatively nice as well. As oil continues to trade, now we're approaching $60.90, and these have a $61 price. Now the difference here is you have $3 of potential as well. So we have $61 up to $64. We have $61 down to $58. You could be buying the bullish spread, and now the bullish spread, completely out of the money. You're going to have intrinsic value on the bearish side because we're 10 pennies, 11 pennies under $61. You'd be buying the bullish one. That would cost you $20. You're getting in at $61.20, the floor being $61. You'd be selling the bearish one. You're going to have intrinsic value there of about 11 pennies, and that would be costing $36. So not a bad trade for the 230.
No, I like it.
For 56,
I like the bearish side of that too, actually.
For $56, and you would have 11 penny head start, call it, to the bearish side. And again, you have till 2:30, and yeah, for the movement we've seen in oil over the last 2-3 weeks, the movement does not stop at 12 o'clock. That's for sure.
No.
Or at least it hasn't. And we'll see how the numbers come out today. What happens after the 10:30 inventory report. But, and again, so $56, that would represent about 56 pennies of movement away from $61 you would need to get to your break even on either side if you took both sides of the trade. But just to put it in perspective as well, you know, you could take either side of this contract, defined risk. On the bearish side, you're starting out with intrinsic value. On the bullish side, it's an out-of-the-money spread. You're starting with just premium, and 61.20 becomes your break-even on the bullish, or, you know, wherever you're getting it on the bearish side becomes your break-even as well.
Yeah, I think we're going to get some action here, man.
Yeah.
You know,
history in the last 2 or 3 weeks would say so. We would see where it goes. But oil in general, I mean, you have action in the dollar recently, right? Commodities in general, gold's gotten some action. All right, we got 3.5 minutes till the numbers, folks. 10:30 a.m. Eastern Time. We're approaching 10:27 right now. We'll be back in 3 minutes with those oil numbers. Come on back.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, everybody. Tommy O'Brien with Tom O'Brien. So we got the Dow still negative, S&P's relatively flat, NASDAQ up 6 points, and we have those oil numbers coming in. We got crude oil inventories rising 5.02 million barrels, gasoline inventories falling 6.27 million barrels. And as we jump over, let's take a look at how that is reacting to the market. And we will get over. So quite a spike. I had this chart up. If you take a look, We were just under $61, if you recall, coming into that 10:27 as we ended the last segment. Within 3 to 5 seconds, literally, oil spiked down 40 cents, down to $60.51. Within the span of the next 10 to 15 seconds, it was back up to $60.90. And as we speak, it is now at $61.08. We're a minute and 20 seconds into the market, post-EIA numbers. And we have some volatility, that's for sure. So we'll see how these numbers react. And again, we had a bunch of different pivot points we could have used, right, with those different trades, depending on where we lined up. The 231 would have been using $61 as kind of your pivot with the floor and the ceiling of the two different spreads. If you're making,
I love that 231.
That's exactly, and that was the one where,
if you're looking at this chart, folks, that spike lower was intense.
It was literally, and that's, I don't exaggerate, within 3 to 5 seconds, it was down 40, 50 cents, and within the next 10 to 15 seconds, it was back up to $60.90, right where it was before the news. And you can see it jumping around right now as we speak. And so, yeah, we have the spreads still up here right now, and with oil trading literally within a penny of $61, you have about 25 pennies of premium on both spreads still. Because guess what? I mean, no matter what the news is out, the market's aware that it's still digesting this number, which way it's going to go. And so there's premium, even though there's very little intrinsic value right now in either of these spreads. And that's where, you don't need to wait for expiration. You could trade these out, especially the 230 is going to have premium for the time in there until 230 with 4 hours left until expiration. And you want to have some quick fingers in here if you ever plan on executing maybe one side of the trade out, letting the other side go. You can always have your order in there ahead of time because, man, we saw that spike down to 60.50, and then we saw the spike up to almost 61.20. You're talking about almost 70 cents of movement in the span of about a minute and a half. And as we speak, now we're below $60.80 as it oscillates around.
And when we take a look at, we have the Bloomberg Live up, and you can see what's happening out here. Is that traders are having basically trying to digest that you got a big build, okay, and then it was offset by drawdowns in gasoline and diesel. And I suspect the market is looking and saying, okay, are those drawdowns, do they have to do with, the bad weather we've had up in the Northeast? People want to make sure they have enough, gas for their cars, heating oil for their house.
Yes. No, and as there are so many numbers that come out within that report in terms of supply, demand, imports, production. And so the top line number is kind of what gets reported first and foremost, right? The crude oil inventories. What were they? What were the expectation? What did they come in at? But like you say, there's so many numbers contained, and it takes everybody a few minutes to digest what that means for the market and how it should get traded or how people expect it should get traded. Because, as coming over at 10:33, U.S. crude imports were quite weak last week, running 7.6 million barrels a day, down 418,000 barrels a day from the previous week. Canada particularly weak, down 344,000 barrels a day week on week. And Saudi Arabia and Iraq both down too. I mean, country by country breakdown of barrels per a day imports, let alone just the baseline inventory number that comes up there. And let's just jump back and see as we give it a minute. So $60.91 currently. And when we looked at that trade, it was costing us maybe $55 to $60 for the 230 trade. That would represent somewhere in the neighborhood of 55 to 60 pennies that we would need away from $61 in either direction to begin breaking even, and then you have profit potential in $3 on either side of that.
And what's intriguing about this, Tommy, right now? We're talking 230. That trade still can be done. This is what's kind of interesting.
Yes,
here, right?
Oh, definitely. And what does happen is a little bit of that premium will come out of what you're paying, right?
Because the news is out, right? Yeah.
Exactly. Now, the 230s in particular, especially as it's trying to digest that news, there's still some premium in there. But yeah, I mean, it's, you know, it's still only 12 pennies away. You're going to have intrinsic value in the bearish spread. You're going to be paying all premium in the bullish spread, and it's still lining up. There's about 20 cents of premium in each. Oh, and as we say that, the market's changing as it spikes a little lower. But you can see that there's intrinsic value in the bearish one because it's below $61, and there's a very similar level of premium as it was near it. Now, as it gets 25 pennies away from it, things change slightly. But yes, I mean, that's something for sure, you know, because there is some premium that just got sucked out of there right after the news came out, at least a few minutes afterwards, because there's always the surprise element that it could be drastically away from expectations and could spike real hard in one direction or the other. And it seems like that risk is kind of eliminated at this point, right? But
yes,
the risk
for this hour.
Yes, no, for sure. As we speak, now we're under $60.70, 60.66, 60.65. So we'll check back in on it. We'll see how that progresses throughout the hour.
Yeah, this 231 was a beauty, man. That's, you know, because I think the reason I'm saying that is because the last 2 weeks we have had very large moves, you know, and they just take a while to kind of, you know, digest that whole deal. So
no, and so to jump back to my chart real quick, you know, let's say you were bullish or something, as you could always buy back your bearish spread. You could get about $43 right now as the market jumps, call it $45. You take that off the table, and let's say you were looking for the market actually to rebound to the positive side. You take the bearish spread off the table, you take a decent chunk of your investment back, cut your losses to maybe only $10 to $15 per trade for both sides, and then your bullish spread remains open if you're expecting that type of inventory report to allow oil to move to the bullish side for the remainder of the day. You have from 61 to 64 until 2:30, and you could always take off one side of that spread, and vice versa. You know, if you were bearish, you get the initial spike to the bullish side. You could always close out the bullish spread, keep your bearish spread open, and same thing in prior weeks. That type of trading would have been a profitable way to trade. It doesn't mean it's always going to happen. Things, you know, the trend could just continue. You know, we haven't been hanging under $60 in a while, and it'd be interesting if this kind of sent it, as we're only about 60 pennies now, 59, away from that $60 price point at this mark.
No, there's no doubt.
Yeah.
And, you know, if we look at the trading from yesterday inside that contract, that had big volume on the way down yesterday. That's why I was bearish, basically.
Okay.
You know, if we pull this up, I'll have, now this is a delayed quote, folks, but what does happen is that you will see the volume on that move yesterday, and that volume was pretty intense on that move yesterday. Let me pull this up. So this is showing that it's trading higher than it is, but this is a delayed quote.
Sure.
But if I do if I pull this up, what you're going to see is that we had some monster volume as that was pushing into its lower swing yesterday. Look at it sticking out like a sore thumb.
So again, that's your market bias. Everyone has their market bias. You figure that out. You look at the trade setups. You compare the risk reward. All right, we'll see where it's at in 3 minutes when we come back. Come on back, folks. Dow Jones down 54 points. S&P negative by 1.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, everybody. Tommy O'Brien with Tom O'Brien. We get the Dow down about 53 points, and S&P relatively flat, and NASDAQ positive by about 8. So we saw quite a spike down towards the beginning of our hour, Tom, from about 10 o'clock until about 10:15. We had the Dow spiking down about 150 points from that level. We're up looking at the futures contract as high as just shy of 25,100. And from there, we spiked down to 24,950. And now we've just kind of been hanging at that level since about 10:15 for about the last half hour or so.
Yeah. So let's take a look at these futures. So right now, we get the futures 27.69. If we pull this back intraday, what you're going to see here is that, you know, you're coming into the lows actually, we're coming into the lows of yesterday, but where we spiked higher right at the close. Okay.
Sure.
So that number, this is pretty cool watching how this shakes out, folks. That number there, the low of that spike at 10 minutes of 4 yesterday was 2764.
Okay.
We hit 2762, and you can see you got 103,000 contracts there. When we came down with 31,000. You know, that to me is just supply and demand. It's like that's going to have to build some cause because there's a buyer there.
That was a big bar. I mean, every market spiked at about 10 till 15 too. Yeah, right, for sure. And I hadn't seen the volume. I mean, quite a volume spike on the S&P there. You know, you knew there had to be buyers just from the market action. I think the Dow got about a 70 to a 80 point spike in the same time span. So there was buying. I mean, it was obvious just from looking at the chart without the volume. But man, that volume bar, and you're looking at a 10-minute chart that you're looking at, quite a spike at 10 till, especially considering the day we had.
That's a big point.
Pretty recently, it seems like either direction, negative or positive, when we've seen that type of a day where most of the action was in one direction or the other, there had been a continuation through the close of that trend. And to see that type of reversal towards the end of the day was pretty remarkable.
That is someone with no fear.
Yes, no, for sure.
And the theory would be, folks, is that as you're coming down, that buyer is sitting there. That buyer, he or she, fund-wise, is going to defend that position. You know.
You know, part of what I was thinking about it, just fundamentally trying to understand it, is maybe they were saying, okay, we're going to let today play out. You know, we're going to let the slide continue. Maybe it's off of some of the political turmoil, Secretary of State Rex Tillerson being gone, you know, but guess what? He says, all right, we're going to let today digest, but I'm going to be a buyer for after today, right? You know, as in something like that, where I'm not going to step in the middle at noon, But I will step in at the end of the day looking for, by the end of the week or so forth, that we'll see higher levels.
No doubt.
Yeah.
And you listen, you know, the way that it came down there, I suspect they didn't sell out yet. I mean, you know, bottom line, you could have sold out overnight, but I think they're going to try to defend that position out there today.
Sure.
That being said, guess what, folks? The longer that we stay under this February 27th, you know, swing point, which is 27.95, well, the higher probability is that it's going to start making its way down to one of these lower swing areas.
Yeah.
You know?
Yeah. And how about Bitcoin? Let's jump over to Bitcoin.
Yes.
Quite a new number at Bitcoin, becoming the new norm as we are sitting. Jump over to the chart. We'll go into our cryptocurrency, Bitcoin weekly spreads, currently sitting 87.23. Excuse me, and that's getting a little bit of a bid. We were down just above 8,500 as of about 9:30, and to pull this back a little bit as well. Not that long ago, in terms of Monday morning, we were up over 9,800. You're talking about $1,100 from Monday morning in 48-hour span. 12% decline, and that is on the heels of a 20% decline last week.
And you know what's cool, folks? If you can test drive the Nadex platform, the spreads are getting so much smaller. Right now, you're trading 87.21. Your bid's 8,700. Your offer's 87.45.
Yeah, no, definitely.
That's pretty cool, man.
It is. And, you know, it's especially, so these spreads get set Monday. So you have from 4,600 to 14,600. You have a $10,000 spread in total. So the middle of that spread is going to be 9,600. But what's cool here is that even at 87.22, with 2 days, call it almost 3 full days of trading because they expire 3 o'clock on Friday, there's no premium versus one way or the other. As in, you know, you could buy this right now and check out your risk reward, right? You're risking $415 to make $585. Now, normally for that type of risk reward, you might have to pay premium on one side or the other. But the market is basically assigning enough risk, as in they're comfortable with enough risk of $415, as in loss potential down to $4,600, because realistically, $4,000, call it, to the downside is enough loss where it kind of equals the realistic nature of your possible profit, as in they're saying most of the time this Bitcoin won't climb above, you know, the same $4,500 increase in price by the end of the week. But guess what? Anytime you can get a risk reward in your favor with defined risk and not be paying premium, as in, you know, you're getting in just above basically the spread, as in just like you said, the bid and offer are just straddling the spread with $20 to $25 on each side. I mean, that's a great trade. And the vice versa, if you want to go short, and you can always exit this, but that's where the risk reward is not in your favor, and you're not getting any type of a better execution in terms of price for that risk reward not being in your favor. You know, you're risking $6 to make $4. You're risking $3 to make every $2 almost. And you're not getting a better sale price, as in you're not able to sell it higher than where it's currently trading at, when you're locking in a risk reward not in your favor. So that's something you always want to be considering looking at these spreads. You know, is the risk reward in my favor, and am I executing at a price away from the market, as in am I paying premium or am I receiving premium for the differential in the risk reward?
No doubt.
Yeah.
And if we look at the you know, the amount of contracts, you're going to see now the CBOE slowed down pretty dramatically compared to yesterday. So 1,400 coins. Now the CME is at 1,300, so that's still running out. What? That's 6,500 coins.
Yeah.
You know.
Yeah.
So that's
and
kind
I
of
think
intriguing.
yesterday when we looked at it, we were up at almost like 17,000 in total, whereas today we're at about 8,000 or 9,000 in total Bitcoins traded. Yeah.
Pretty wild, man.
It is.
Yeah.
It is. Volatility either way in the crypto world, man. And just like you said, John Oliver did a segment Sunday night. I did check it out. I usually try and check out that program at some point during the week. Good segment overall. Pretty intelligible in terms of the garbage that gets thrown out there, you know, about the cryptocurrency world in terms of, you know, what is the value of a Bitcoin? Well, it's what someone's willing to pay for it. Well, guess what? What's the value of a dollar? What somebody's willing to pay for it. But where does that come from? Well, it gets held up by the U.S. government, but it's still only what somebody's willing to pay for it. You know what I mean? So
there's no doubt.
Any currency has really no value in terms of it's only what somebody is willing to give you. Now, governments put their backing behind it. That changes the dynamic, but it still remains, what's the value? Well, the value is what somebody's able to give you for it. It was an intriguing segment. If people want, to check it out, it's a nice 10, 15-minute segment. I know he has all his segments usually on YouTube. Check it out.
Stay right there, folks. We have the Dow Industrials right now down 50. Nasdaq is up 12. S&Ps are off 2. Tommy and I come right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Thinkorswim. Next on TFNN.
Welcome back, everybody. Tommy O'Brien with Tom O'Brien. We get the Dow down 48 points, S&P's flat, NASDAQ positive by 13 points. And to check back in on the oil contract, we're now at 10:54 a.m. Eastern Time, and we got a trade in about $60.79 currently. And again, the trade
laying there now.
What's that?
It's kind of just laying there.
It is, and if you look, what's interesting about the chart is that every bar is kind of creating this triangle so far. And again, we're only 25 minutes into the news. Man, we've seen turnarounds at 11 a.m. We've seen turnarounds at 11:30 a.m. recently. So the trend is not set here for sure. But it is interesting. The first bar, so wide. Second bar, a little bit more narrow. Third bar, right, a higher low. Fourth bar, again, and then these last two 5-minute bars we're looking at are very, very narrow in terms of $80, $60.80. So again, you know, to kind of wrap up.
Which way is it going to break?
That's right. If it's going to break, we'll see. We will see. So we'll see where the day plays out. You would have had till 2:30 on that one trade we kept talking about with $61 as your price point. And we'll see where the day leads on crude. So what else is going on today, man?
Well, let's go over to the gold market before we finish up here.
Okay.
So if we take a look at gold, what you're going to see out here is that we hit the 1321 out here. Now, yesterday we went higher and we had volume, and we have volume again today. We got to 1330. You get 193 contracts. I like the setup. Yesterday we did 330. So bottom line is it's grinding up into a higher price.
Okay.
And it has volume behind the move, and that's what I'm looking for on a continual basis. That's for sure.
Okay.
So
we will find out. We'll find out everything.
We certainly will. Folks, you stay right there. We get swim lessons coming up next, and of course our man, Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Have a great one, Tommy. Have a great one, folks.
You too. Thanks, everyone. Have a good one.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.